DC is super busy trying to get a stablecoin bill in place. Today, we're going to break that down for you and the kind of impact it could have on the market. I got a special guest. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. Let's get going. I do want to thank our sponsor today. That is Coinbase. And if you're brand new to crypto, maybe you're brand new into this new digital asset space, start by going over to Coinbase.com. And you guys can get started. The future of money is here. You get a little bit of a bonus by signing up with our link. So just use that. It does help our channel. But really, this is about getting you on your crypto journey. So check it out. Use Coinbase.com to get going here. I want to go over to a couple of things real quick. One is the Democrats. And they have caved as they prepare to rubber stamp crypto, the Trump crypto corruption. We'll see how that goes, because there's two things happening right now. One is the stablecoin bill, which looks like it's going to get done. But the deal was to possibly get a vote on this whole Trump crypto corruption scenario. But if you look down here on this statement, late on Wednesday, Democrats took the last paragraph right there. Democrats took a deal that will give them a standalone vote on the End Corruption, Crypto Corruption Act. This is as an amendment to the Genius Act. When that fails, and it will, because Republicans in the majority are not going to vote for that. So the likelihood is we're going to get a stablecoin bill most likely today. That could really have some big impact on the market. Before we get to our guest, I want to play a clip for you guys. Take a look at the Democrats' last stand. Here we go.
So today, Republicans in the Senate will try to jam Democrats by forcing a vote on a crypto bill. No Democrat or even Republican has seen what the bill actually says. We don't know if it prevents Donald Trump's corrupt crypto dealings. We don't know if it prevents terrorists. It should. And we don't know if it protects consumers from getting scammed. It should. Democrats, if we stand strong, we have an opportunity to actually shut down this particular vector of corruption.
It's become clear that there is no path to a bipartisan compromise to crypto without addressing the elephant in the room.
So as you can see, this is going to affect the market. Democrats are holding strong. That was Richie Torres, which has been somewhat of a pro-crypto Democrat over the little bit. Joining me now is Samir Kerbage, who is the CIO over at Hashdex, to break this all down. Samir, how are you?
I'm good, Paul. Thank you for having me.
So let's get into a couple of things. I want to go around. Obviously, stablecoins are going to have a big impact on the global crypto markets, especially your own business within that. Eleanor Terrace, she hit on this, talking today that Senator Hagerty has introduced this stablecoin bill. And if you look at it right here, the staffers say they expect the bill to move quickly through committees in Congress. It'll be discussed in today's press conference with David Sachs, which is happening here maybe within the hour before we even publish this video. When you look at that right now, do you feel like this is going to pass? Are you confident yet? I feel like I am, but what about you?
Yes, I am, Paul. So what we've been hearing from DC overall is that there is bipartisan support on the technical side to get this approved. A stablecoin is a technology that's very important. It is strategic for the United States to keep the dollar dominance in the 21st century. So I think this is a matter of time. What we're seeing now is the political dance, right? So maybe we wished for a pro-crypto Congress and a pro-crypto president. Maybe now it's too much pro-crypto, and now we're seeing resistance on the other side from the Democrats. So it's a political dance. I think it's a matter of time until there is consensus to get this passed.
Well, there's a lot brewing as to the potential for stable coins as a whole. Here's a clip from Michael Saylor, who's talking about, what this market could look like. Take a look.
What's the use of it? It's like medium of exchange. How big is that? $10 trillion. Right now, there's probably $250 billion of stable coins. So if the U.S. government regulates that, you'll see that go to $1 trillion, $2 trillion, $4 trillion, $10 trillion. What's it competing against? Every other currency.
Yes.
Who's the loser? Every weak currency. Nobody's going to want to. Every currency in Africa will collapse, right? No one's going to use any of them.
Yes.
Right?
What he's really getting into is kind of a shift around the financial system globally, because this could really change things dynamically, I think, across many countries who do have weak currencies, and an immediate injection of funds into treasury-backed stablecoins, most likely. Who do you think has the best chance to win once this gets through Congress and the United States really starts to amp up the potential for stablecoins?
So it's important to highlight that we've been seeing an exponential growth in adoption of stablecoins, especially in emerging markets. So normally in regions that have more capital controls, in which it's harder to access the US dollar, right? Saylor is right when he says that there's a challenge for weaker currencies, because if it's very easy to have the US dollar, anyone can have on your cell phone the US dollar, why do you need your local currency that has a higher inflation rate, right? So that's why this is a very relevant technology that's been growing very significantly, but it doesn't have the support of the US government, at least up until now. So if we get the stablecoin bill passed and we have regulatory clarity around stablecoins, what we're going to see is US banks and the big financial institutions issuing stablecoins. So who's going to win that race? I think it's too early to tell. Like, you definitely have the international winners like Tether. It's a huge, has a strong network effect. It's a huge stablecoin right now. But we're probably going to see multiple stablecoins and multiple, what I like to call tokenized deposits, right? So you're going to choose whatever bank you want to work with, and you might have your tokenized deposits, your stablecoins that are issued by that bank. So I think this is definitely too early to call the winners in that space.
Samir, do you think this is maybe where we truly see institutional coming on board in a much greater, I mean, we've seen it, yes, with the ETFs from BlackRock and most of what we've seen around Wall Street in terms of people understanding what this means as an investment vehicle. You know, Kevin O'Leary's been out there calling it the 12th sector. Maybe Wall Street is finally in the right place at the right time. Do you feel like this is just the beginning of institutional adoption?
Yeah, we can think about institutional adoptions in two ways. You have the investment and you have the usage, right? The adoption, the actual usage of the technology. A stablecoin, we believe that stablecoin is the first killer app for crypto. It's probably the first application of crypto that will hit mass adoption. That's going to make it easier to do payments, international payments or local payments on your cell phone without using like credit card networks or a SWIFT network that's full of intermediaries and it's very expensive. So it's a very transformative technology, okay? And this is definitely going to be a transformation for our society.
I want to play a clip for you because this, of course, is our arch nemesis coming in and trying to continue the campaign. Take a look.
Crypto is essentially, it is a scam. It's probably exactly what you think it is.
All right, Corey, before we go further, don't assume that we know as much as you think we know about this issue. Why should I be investing in a CD rather than in a stable coin? But I got 4% interest on a CD?
You get none of those protections with a stablecoin. You get no interest. The stablecoin company gets all the interest.
At $1,000 a year from now, I've lost, it's worth $960 or something like that. Is that correct?
They absolutely could be worth way less than you bought them for.
So I've actually lost money. Is that a fair summary?
Yeah, absolutely.
Okay. Sasha, jump in.
I mean, they're basically just little bits of digital nothing that have no basis in the financial system. They're also a haven for criminal activity.
There's no end to the kind of crimes you can perform
Murder for hire?
in this ecosystem.
People are using crypto to kill other people?
That's right.
You have to laugh.
Okay, yeah, I have
So
to
you think
laugh
I should
because
vote
of-
against this bill, huh?
Strongly, respectfully, yes.
I have to laugh because it just shows you how unfortunate it is right now in much of our, lawmakers who don't really understand kind of the future of technology. But listen, we've lived through this before in other technology phases, so it's not like it's a brand new situation that DC is just now facing. It's happened before in mobile, it's happened before in the birth of the internet, what we saw there. Same kind of thing, I think, with blockchain and AI, both of those kind of things that are playing out here, Samir. Unfortunately, those kind of things happen, so it is what it is. But anyway, I want to get to another clip here. This is the CEO of Robinhood, and he's talking about, now he's getting into the point of, hey, this is actually how we could use stable coins within the market. Take a look.
2021, we had the whole GameStop situation. Settlement was T+2. That was a big problem. You had to hold cash collateral for trades for 2 days after those trades were made. The firms like Robinhood had to put up corporate cash. We're not even talking about customer cash, but corporate cash as activity increased. And this is like fairly low risk activity. I mean, we're talking about people fully paying for their securities and buying. And all of that is due to this settlement delay. So not everyone is a fan of instant settlement. There's firms that actually hold these securities and hold these assets for multiple days. They hold the cash and they earn interest on it.
What would that week have looked like for you guys if you were able to actually do instant settlement? I mean, or are we just not even having, that conversation? Like what would that have looked like?
There wouldn't be a need to hold collateral for trades during the settlement period.
Yeah, one of those rare crypto actually does fix this kind of cases. That's great.
Yeah.
Bernie's clip back there was talking about, they didn't really understand how yields were generated because this is a treasury-backed stablecoin ecosystem that we're talking about, outside of Tether, even Tether to an extent. I mean, do you feel like that is going to be the killer app for stablecoins, or do you think it'll be more to what Vlad was talking about, which is instantaneous settlement? Where do you think the balance of the market will trend?
So as a payment technology, stablecoins can completely change the capital markets. Okay, so it's important to remember that the capital markets that we are used today, that works very well for us, it was created 300 years ago and still works basically the same way. So the reason why you have a T+1 or T+2 or T+3 settlement is because in the past you needed to move money around. So you actually needed to take like certificates, you need to take cash and move it around the country. So it would take a long time. And then we still see this for international trading also. We built a legacy infrastructure on top of analog processes, right? And what crypto offers us now is the possibility of building a new infrastructure on top of a fully digital process. And that's what the stablecoin will bring. And stablecoins, we believe, is the first layer. So if you make it easy to send a payment to anyone, anywhere, if you make it as easy as sending an email, then you can start building things on top of this. And you might not get interest on your stablecoin deposit on your stablecoins, but you can have access to tokenized money market funds that you can switch 24/7. So you can hold all your savings in a money market fund. And then when you need to pay for something, you do atomic swap. You convert that money market fund shares for stable coins and you use it for payment. So this whole discussion around like not having interest, not paying interest, like you're not getting interest on your bank deposits right now. You might get some, but you need an investment vehicle for that. So you're going to have, like with a stable coin paradigm, you're going to have the payment currency, and you can have a money market fund or a yield-bearing stable coin that you can use for store your capital. And then after you have this, it's going to be way easier to do digital payments than doing analog payments. We're going to start to have most of our savings on-chain.
No doubt.
And then when you need to invest, you can either invest in tokenized assets. So when we're talking about real-world assets, like equity, ETFs, all being tokenized, fixed income instruments and funds, or you can withdraw that money, send this to the traditional legacy rails, send to a broker-dealer, and do your transaction taking 2 days to settle. Right? It's just going to be way easier to do this on-chain. And that's the whole point, right? So it's impressive to see like people talking about crypto that way. And if you just replace crypto for internet and go back 20 years, you will see like the same people talking about the same thing. This is used for criminals, has no value, and like all those things that we're used to see.
The typical fake news side of things. All right, so when you look at where this market could explode to, right now there's a handful of, stablecoins out there. I would say USD. If you're US based, it's probably USDC that you're using. If you're outside the United States, it's most likely Tether. Then you have kind of the bank-oriented potential, stablecoin, and that could be RLUSD. With RLUSD coming into play, with what XRP, I don't know, obviously maybe some of this acquisition talk around Circle is posturing for what Ripple is trying to do, but maybe there is something there. Do you think RLUSD could have a winning position in the market once we see this? Like, for instance, Bank of America, Wells Fargo, JP Morgan Chase, whoever it might be, accepting RLUSD as a stablecoin.
It's important to remember the Ripple is a payment company, and it has existed even before crypto, even before Bitcoin. So I think it's natural that they're trying to come up with a payment solution for the 21st century and leverage this stablecoin technology and the fact that we're possibly going to see regulatory clarity on stablecoins to advance their business. So I think like that stablecoin, along with others, it's going to see exponential growth in the coming years, especially if there is regulatory clarity in the US. And this is all going to benefit, in the end, all those transactions, they happen on smart contract platforms.
Right.
Okay, so I think from the investment standpoint, the big reflection of this is adoption and transactions on the underlying smart contract platforms. And that's going to increase the demand for the native token. So in the end, what I think is very exciting about this is it gives a very strong use case and demand for block space in the smart contract platform. So smart contract platforms will benefit from this.
No doubt. Listen, you guys, of course, have led the way here with an XRP ETF. The future plants its first flag. I pulled that from your Twitter. And you look at what you guys are doing in terms of performance. This is the Hashdex performance. XRP is the red line for those of you kind of charting along here. And you can see XRP has really kind of been on the top level in terms of asset performance individually. Why, first of all, why is this your third largest? I was also looking at just the weight of your portfolio right now, Bitcoin, ETH, then XRP, Solana. Why is this your third holding position? Do you feel like this is something that is going to continue to grow, or what is your strategy here?
So Hashdex is a crypto-focused asset manager, and our flagship product is a product that we co-developed with Nasdaq. It's an index. So it's like the Nasdaq 100 for crypto. Has very stringent eligibility rules and a strong governance from Nasdaq to select which assets are eligible to be included. And then after they're included, they're weighted by their market capitalization. Okay, so it's really a passive investment. And we've been seeing this growth of XRP, especially in the last few months after, they have won the lawsuit against the SEC, and this new administration came and dropped the lawsuits, and all this, uncertainty around the project vanished. We've been seeing a strong price momentum on XRP, and that has made its representation on the index to increase because its market cap increased relative to other projects. So this is a passive way to get exposure to the space. So it's a benchmark for the space. And what we see now is a reflection of how the market evolves over time and how it's hard to, track this market.
Well, you guys have almost a little over $1.25 billion of assets under management, 7 years obviously in the industry. So you understand where this market is trending. I got to ask you this. When you look at, this is going to happen. We are going to see a stablecoin bill in the United States. The world's reserve currency is now going to have access to a new digital frontier. There are going to be winners and losers here. Which blockchain do you feel has the most to gain from this stablecoin bill going through? I mean, obviously, if you look at USDC or even Tether to a certain extent, Ethereum, you look at XRP, possibly with XRPL, and also what we'll see in terms of RLUSD. Where do you guys think this will line up in terms of stablecoin domination?
It's still too early to call the winners. And I think there's space for multiple different smart contract platforms and blockchain networks. But I think that Ethereum tends to benefit a lot from this.
Did you say Ethereum?
And the reason why, yes.
Okay,
and I say Ethereum because if you think about it, in the last few years, Ethereum has been facing a lot of resistance because maybe it scaled too much. Right, it went to in a moment it scaled to a level in which the demand for block space is not there, and as we see exponential growth in stablecoin adoption and Ethereum being this dominant position and being the standard, I would say, smart contract platform, that's going to attract most of the demand. And if we see stablecoin adoption, we're going to see more demand for block space, and that's going to be positive for Ethereum. So I think on a relative basis, Ethereum tends to benefit a lot, especially because, it has been through the last few years has been very hard for Ether prices. So I think that there's some definitely some interesting surprises coming from Ethereum.
Yeah, hey, listen, as we record today, ETH back above 2,000, so that's been a nice move on a short period, but I think also a lot of people looking at this condition really on two areas. One is the stablecoin bill that's going to come through this week, and the likelihood of softening on the tariffs could start to really bolster a lot of the action in the markets in general. Samir, we're definitely going to have you back on to talk more around Hashdex and XRP, the ETF, how you guys are starting to roll. We'll get you into one of our XRP videos for sure. But thank you so much for coming in today. We appreciate it.
Thank you so much, Paul.
You bet. It was great seeing you. All right, you guys, if you're not in the Diamond Circle, get in right now. It's a great place to get additional content from us, and also it's free. So it's very easy to do. Just use the link down below. If you have not followed me out there on X, do that. It's just @Paul Barron. We'll catch you next time right here on TechPath.